Okay, so we're here for our usual monthly review. So we're here to talk about February today. Obviously, there's a lot going on at the start of March, so we'll discuss that as well. But to kick things off, John, why don't you give us a bit of background on what happened with markets in February?
Yeah, it was a fascinating market environment. It was the first month that we've seen a significant unravelling of the AI narrative, which has been driving market returns over the last 2 years. So we did see US equities underperform, and particularly the most highly rated sectors, which had been prone to momentum crowding in terms of market performance.
So we've got a small underweight to US equities within the IMS portfolios, so obviously a bit of a beneficiary there. The offset of that is our Japanese equity overweight, where we've seen stronger numbers in terms of corporate earnings and in terms of the economy, but it's not quite delivered yet in terms of the market. So have you kind of got any thoughts about what's going on there, really?
Yeah, I mean, it's been a shame, really, that the strong earnings delivery that we've seen and the significant pickup in terms of growth expectations haven't yet fed through into the market, but we do expect it to take place in the months ahead. I think Japan's been very much left behind in terms of the market environment. And outside of that, you know, we've had a reasonably strong performance from the UK market. Europe's done extremely well. We expect that to continue as well. So the broadening out theme is generally a supportive backdrop, I think, for portfolio performance.
So we're talking mostly there about equities. With the portfolios, there's kind of four key elements of the multi-asset portfolio. So we have equities, we have fixed income, and we have cash, and then we have diversifiers as well. So I think it's probably just worth touching on diversifiers, which is kind of an important part of the portfolio, and where there's been a little bit of activity. So just kind of your thoughts on some of those diversifiers, really.
Yeah, I mean, gold's a cornerstone in terms of a diversifier. It has return-seeking properties with lower real interest rates coming through in the US and globally. But it also does act as a tail risk hedge against rising geopolitical tension, and we're seeing some of that coming through as well.
Yeah, so I think that there's been, as I said, a little bit of activity in terms of with the portfolios within our diversifiers. So within the property element of diversifiers, we've added 2 new names over the period. So we've added the TR Property Investment Trust, and we've added Tritax Big Box REIT. So I think with all of our diversifiers, we're always looking for at least one of 3 criteria. So we're either looking for those uncorrelated returns, we're looking for consistent income generation, or we're looking for some risk management from large index constituents. So I think that remains key for those diversifiers. As I said at the start, we mentioned about what's been going on at the start of March. So maybe an opportunity to talk a little bit about that and then to touch maybe on the outlook going forward.
Yeah, so we've had quite a broad-based rally in European equities on the back of the expectation of a big reflationary push from the European governments. And we've seen some cyclicality return as well into the market, which is a big change. And since then, we've had a continuation of the derating of highly rated US equities, and I think we expect more of that in the months ahead.
Yeah, so I think looking forward, where are we kind of positioning portfolios and thinking about the macro outlook?
Yeah, so we're positioning for a catch-up in terms of economic and earnings growth outside of the US. We expect slightly lower interest rates in the UK than's priced in, so we quite like UK gilts. And then within that as well, we still hold gold as a return-seeking asset and also as a tail risk hedge.
So choppy markets for now, but I think opportunities still in the future.
Absolutely, yep.